All right, I don't know if you've heard this, but the Oracle of Omaha, Warren Buffett, just made a pretty unprecedented move, unexpected to say the least, in the real estate world amongst all the economic turmoil. In today's video titled Warren Buffett's Real Estate Play Amid Economic Chaos, we'll dive deep into Buffett's strategic investment in the housing sector. We'll uncover the reasons behind his decision and explore the potential impacts on the real estate and mortgage landscape. So stay with us until the end to discover some exclusive insights, predictions that could reshape your perspective on real estate investment in these unpredictable times. All right, before we dive deep, if you're new here and haven't subscribed yet, hit that subscribe button for more insightful content. I certainly appreciate it. If you find value in today's video, don't forget to give us a thumbs up and drop your thoughts in the comments below. I truly appreciate your support and engagement. It helps me bring more quality content your way. Thank you for being a part of our community. We appreciate you. With the ever-evolving dynamics of the housing market, understanding strategies of influential figures like Warren Buffett can offer invaluable guidance. So let's dive right in. In a world of ever-changing markets and unpredictable economic tides, one name stands out as a beacon of wisdom. Warren Buffett. He's been there for a long time, and he still is a beacon of wisdom. But even the Oracle of Omaha has left us scratching our heads with some recent moves. In a market where builder sentiment seems to be on a downward trend, if you saw the recent numbers, Warren Buffett's move has everybody is raising their eyebrows. Berkshire Hathaway recently disclosed a whopping $814 million investment across 3 different builders. So D.R. Horton took the lion's share, with Berkshire purchasing 6 million shares valued at roughly $726 million by the end of the second quarter. This alone made Berkshire one of D.R. Horton's top 10 shareholders. But Buffett didn't stop there. Berkshire also acquired 152,000 shares in Lennar and about 11,000 shares in NVR. These investments come at a time when Buffett has been notably conservative, selling billions in other stock. In fact, he's been a net seller. So what's the play here? Is D.R. Horton's PE ratio being relatively attractive compared to other industry giants? Is that the play? It suggests that, Buffett sees some sort of value here. Perhaps he's anticipating a future surge in demand, or maybe he's identifying underlying assets and potential that the broader market has just flat out overlooked. So whatever the reason, typically when the Oracle of Omaha makes some sort of investment, especially in builders, he's seeing something that others aren't. And only time will tell how it all plays out, but I would pay attention to this particular move as it has broad implications specifically in the real estate market. In the intricate dance of global finance, rating agencies play a pivotal role. They assess the creditworthiness of borrowers, be it corporations or governments, and they assign ratings that the investors use to gauge that risk. Historically, these agencies, really have the trust of all investors, and when they speak, markets listen. Their ratings can influence interest rates, investment flows, and even government policies. So when Fitch downgraded the U.S. sovereign rating from AAA to AA+, it wasn't just another headline. It was a seismic shift. The AAA rating is a badge of honor, a testament to unparalleled creditworthiness. A downgrade implies increased risk, and for the U.S., historically seen as a bedrock of global finance, this was monumental. Enter Warren Buffett with his buying spree of T-bonds and T-bills, right in the midst of this downgrade. It seems counterintuitive, but then again, Buffett has always danced to his own tune. On the flip side, we have Bill Ackman, a high-profile investor with a starkly different view. Ackman has gone short on 30-year treasuries, essentially betting against them. So you have 2 high-powered investors, very well-known investors, on either side of the trade. So what does this divergence mean? If the market sides with Buffett and confidence in U.S. debt remains robust, those T-bonds and T-bills could prove to be a golden ticket. But if Ackman's view prevails and long-term rates rise, Buffett's position could face headwinds. So who are you betting with? The question is, do you think interest rates are going to rise, or do you think interest rates are going to drop? If you're on the side of the fence where interest rates are going to drop, then you're a Buffett guy. If you think interest rates are going to increase, then you're an Ackman guy. This is a high-stake game of financial chess with two grandmasters making their moves. Buffett with his trust in the resilience of the U.S. debt, and Ackman hedging against the potential upheavals. As the market pendulum swings, one thing is certain: the world will be watching, eager to see which strategy triumphs. In the world of real estate, mortgage rates are more than just numbers. They are the heartbeat of affordability. As they rise, the dream of home ownership becomes more elusive for many. So here's the conundrum. As mortgage rates climb, monthly payments increase, making homes less affordable. Yet despite this, home values are skyrocketing. Reputable sources like Black Knight, Case-Shiller, Zillow project a staggering 6 to 10% appreciation this year alone. So one might assume that as rates climb, demand would soften, and certainly to some extent that has been the case. But here's the twist. Home values continue on their upward trajectory. Again, I can't say it enough. It's almost challenging to watch because it's so counterintuitive to what we've known and what we've seen in the past. Typically, you would see housing values soften, or at least not continue on the trajectory that they are on. So where does the Oracle of Omaha, Warren Buffett, fit into the housing enigma? His recent investment in builder stock suggests he sees an opportunity, a silver lining in this complex tapestry. Perhaps Buffett recognizes the enduring demand. With the higher rates, people still earn for a place to call home. This unwavering demand, coupled with limited supply, certainly may be driving up the values. We haven't seen anything like this in history when it comes to the housing market. Buffett, with his unparalleled acumen, might be banking on the sustained demand. He could be anticipating that even as rates rise, the intrinsic value of homes, driven by their scarcity and the emotional value they hold, could keep this market buoyant. In a landscape where numbers and emotions collide, Buffett's move might be less about the present and more about forecasting the future. A future where the essence of home outweighs the numbers and where demand, despite the odds, remains king. Thanks for watching. We look forward to seeing how this all plays out. But for me, I'm incredibly encouraged to see Warren Buffett investing in real estate, investing in interest rates. That tells me that we are, in fact, closer to the end of this than the beginning. My name is Darren Hunter. If you liked the video, please give me a like. If you didn't like the video, don't like it. If you want to subscribe, please do me a favor. I'd love for you to follow along as we dive into all the real estate and economic information that's out there. Have a great day. Leave your comments below, and I wish you all the best.